Hey there, traders. Todd Gordon of tradinganalysis.com and Inside Edge. Hope you're well. Big CPI tomorrow. Pardon me for dressing like a baseball coach because that's what I got to go do in about 5 minutes. But I need to get you updated on CPI for tomorrow. And then, can you believe that earnings season starts Friday? Holy bananas. So things are very quiet. But there's been some crazy moves in sector rotation on the macro front that is related or correlated to the outlook on rates and inflation. And it's a much bigger discussion, one that I would like to have with you more in the future, but not now because I've got a bunch of kids waiting for me. But I wanted to talk to you quickly. So markets have been very quiet, okay? And if we just look at the NASDAQ, I'll show you the indexes quick. We've been really sideways from February 29th until here we are, April 9th. So I believe us to be in a wave 4. I think the correction is pending completion. And one of those two catalysts that I mentioned, either CPI tomorrow or earnings season on Friday, could be the sort of the path up and out. Now, the market's gone through quite a crazy realization, one that I hate to say that I knew what the market was going to go through, which is we're not getting 6 rate cuts this year. We're not getting 4 rate cuts. We're not getting 3. Will we get 2? I was even skeptical of that. Now we're down to 2. Fed fund futures are pricing 2. Probably going to go down to 1 and 0. And then, I think if they threw 3 in there at the end of this year, that's you start to wade into the political waters a little bit around the election. So, I think the market is strong, the economy is strong. It's just the market's going through this realization that we're not getting those rate cuts. Okay, and that's been, I think, the catalyst for the rotation that we're seeing. Also related is the move in the macro and the commodity markets, the rotation that I want to talk about, and as I just mentioned, the sideways move in the indexes. So here's where we're at. Now, I think we do have further upside to come. From the NASDAQ here, guys, we're looking at this as a wave 1. And if we look at wave 3, we got nowhere near the 100% price projection. So that would mean wave 1 is longer than 3. So therefore, based on this count, okay, in fact, it was a 61% relationship of 3v1. Based on this count, 5 needs to be shorter than 3. So if you do ratio analysis, 5v3. 61 is at 19,325. And based on this interpretation, the invalidation is going to go right above that green guy at 20,272, because that would be the point at which 5 is longer than 3, and that would mean that 3 is the shortest of the sequence. Okay, so while we're above this level, it looks like we will have some upside to come. However, there's significant rotation happening in the market, as I mentioned, that's making this a little bit more complex. Okay, here's the S&P on the daily, a little tighter count. We've seen more leadership. Would you believe the S&P is up more than the NASDAQ on the year because of that rotation, even with everything that's going on in semis, specifically NVIDIA and SMCI. So I see this as wave 4. Wave 3 was shorter than 1. Therefore, 5 must be shorter than 3, and that is true all the way up to 5781 in the S&P. Okay, so I have some highlighted zones up here in the top in the S&P. Okay, now the other thing we got to mention is I wrote an article on CNBC about this. I've been pretty vocal and talking about this. We're into the 1272 extension on the weekly. Okay, so the 2022 decline. When you break through 786, more times than not, you shoot up to the 1272, and that's exactly what's happened. So we're at a significant resistance zone. But, back to the daily here, I still see us as a 4th wave, which one more move to come, and then we have some serious questions to answer. Now, if you take a look at yields, one of the big reasons that, again, we've seen hesitation is these yields, these 10-year yields have pushed higher on the realization the Fed isn't going to cut 6, 5, 4, 3, 2, maybe even 1 or none times this year. Okay, so as the yields have been going up, we've been pressuring, the stock bull, and specifically tech stocks and growth stocks and communications and consumer discretionary. right? Anything offensive. Now, we do have some resistance in the 10-year yield, 4.48 up to 4.65. Okay, so what people, I gotta go, but what people don't understand is they've been selling the market every time that 10-year yield kicked up. But what people don't realize is it's good when you put it in the context of its relation to the 2-year yield, which is the yield curve. The 2-year yield is not going up. The Fed's not going to raise rates. The 10-year yield could go up. What that's going to do is that's going to take the 10-2 yield curve further out of inversion. We've been ranging anywhere from 40 basis points to 30 to 20 of inversion. And if the 2 stays flat, 10 goes up, that takes the inversion out. On the surface, stock investors don't like it, but that's a good thing because we're moving out of inversion, okay? So that's that. So the rotation that I mentioned, which again, markets don't like the yields moving up on its face, but once they see what's actually happening, they might say, oh, it's actually a good thing. The kids are upstairs yelling at me. Okay, so here's the rotation, monthly, weekly, daily. Now we have the Vanguard growth and Vanguard value. We've seen value move up, picking up momentum, but it hasn't quite made the turn here on the monthly, okay? And the growth has been dropping momentum, but it hasn't hooked back, losing any relative strength, which is the horizontal axis, okay? But we're losing momentum on the monthly. On the weekly, which we're going back as far as the beginning of the year, pretty much first, second week of 24, here's what we've done. We have lost momentum and relative strength and growth and value. Value's moved up. Let me say it again. We've picked up relative strength and momentum and value. We've lost it in growth, and that is also confirmed over here in the daily, right? So we're seeing a rotation into value out of growth. And a big theme that we're seeing here, are industries like energy, XLE breaking highs. Come on, breaking to new highs, right? You're seeing XLB, materials breaking highs. XLB moving to highs. XLI, industrials have been doing great, right? So there's this value rotation in. Now, however, it's interesting because Julius, if you saw the video he put out for us, he mentioned that the small cap growth is doing well. And it is. So there's this, so we've got mega, large, and mid cap growth coming out, but the small cap growths are acting well. The indexes are very sideways. So what we're going to be doing for the rest of the week here is working within these scans, within the small cap growth. These are some of the leading stocks that are hitting our scans and our criteria within the leading, as well as in the improving. So there's a lot more questions than answers right now in this market. And I think, as I said, CPI and the beginning earnings will start to give us a little bit of resolution. I can't go into what's going on in the commodities with gold, silver, gold-silver ratio, copper, gold-copper ratio, S&P gold ratio. There's some interesting things going on, so stay tuned. I have so much more to put in front of you, all right? Hope that helps. As I said, not trying to be elusive, but there's more questions than answers right now, and we have to be good with that. All right, see you guys.